to the business news on Sunrise. Coming up this morning, a Bank of Ghana governor hits at policy rate tightening as global central banks pause easing cycle amid ongoing Middle East conflict.
So far, early indications point to a re-acceleration of headline inflation in several advanced and emerging market economies, prompting several central banks that have commenced easing cycles to pause.
Meanwhile, finance and tax analysts expect Bank of Ghana to hold policy rate at 14% amid global trends.
We expect the central bank not to cut, not to hike, but rather maintain the policy rate at 14%.
Plus, financial analyst Joe Jackson cautions against fuel tax cuts. Says move could undermine Ghana's economic recovery amid rising fuel prices.
If you want to know how pushing the price of fuel can destroy an economy, turn around and look at Nigeria.
I am Christabel. Success Trevor will bring you the details of all of this shortly. Please stay with us. The governor of the Bank of Ghana, Dr. Johnson Esiama, has warned that the prolonged Middle East conflicts and rising global energy prices could reverse Ghana's recent inflation gains as the central bank begins crucial monetary policy discussions. He hinted at the possibility of a tighter monetary policy stance, noting that several central banks across the world have paused or reversed their easing cycles following the external shocks. My colleague Bismarck Ewusa has more in the following reports.
Governor of the Bank of Ghana, Dr. Johnson Esiama, says the ongoing Middle East crisis is now the biggest external threat to Ghana's economic outlook. Speaking at the opening of the 130th Monetary Policy Committee meeting in Accra, Dr. Esiama said rising crude oil prices and global uncertainties are expected to dominate discussions over the next 3 days.
So far, early indications point to a re-acceleration of headline inflation in several advanced and emerging market economies, prompting several central banks that had commenced easing cycles to pause or even to reverse course. So for a commodity exporting, energy importing economy such as ours, Ghana, the transmission channels of this external shock are multiple and material.
The governor revealed that the committee will also review the country's interest rate structure as inflation continues to ease.
The issues range from realigning the entire interest rate structure in the economy as inflation remains low, to addressing policies to ensure inflation expectations do not become dislodged.
Dr. Esiama further disclosed that Ghana's new IMF policy coordination instrument will focus on improving monetary policy effectiveness and strengthening inflation control measures.
The PCI will incorporate commitments relating to the Bank of Ghana's monetary policy framework. It will improve on the transmission mechanism. It will enhance the liquidity forecasting framework and maintain conditionality around the inflation targeting regime.
That was a report by my colleague Bismarck Ewusa. Meanwhile, according to a finance and tax analyst, the Bank of Ghana is widely expected to maintain its monetary policy rate at 14% in its upcoming meeting. Nelson Kujo-Kwabeji's projection comes as the central bank balances the critical dual priorities of price stability and economic growth. The forecast follows recent data showing that Ghana's inflation notched up to 3.4% in April. Locally, lending rates continue to hover between 19.5% and 20%, while the Ghana reference rate stands slightly above 10%.
The European Central Bank held the policy rate at 2% on April 30th, and that is actually the fifth consecutive hold. The Fed in the US also held at 3.50 to about 3.75% on April 29th. The Bank of England is also holding with UK inflation above target. The Bank of Japan is the only major central bank, I would say, that is actively moving, tightening towards 1% by year end. And so we expect the Bank of Ghana to factor all this trend by the global central bank into consideration.
Nelson Kujo Kwabaji is a finance and tax analyst. Financial analyst Joe Jackson has pushed back against calls for government to reduce fuel taxes to cushion consumers from recent increases in fuel prices. Rising tensions in the Middle East have driven up global crude oil prices, leading to higher prices at the pumps in Ghana and prompting renewed calls for government intervention. Despite some measures introduced by government, fuel prices have continued to rise in recent days, intensifying pressure on authorities to consider further relief measures. Speaking on Business Focus on TV3, Joe Jackson warned that scraping some fuel taxes could pose significant risks to Ghana's macroeconomic stability and undermine ongoing fiscal recovery efforts.
I don't think we should be scrapping taxes. I don't think we should be scrapping and cushioning the price of fuel.
At the risk of losing gains in your macroeconomics, inflation going up?
The losses you would make from being indisciplined, from having your bills go up as a government, are worse than what will happen to us if inflation goes up. Remember that we have an energy debt to pay. The reason why we are all excited, we've left the IMF and everything, is about the discipline we have shown. And yet, this discipline is from one purse, the government purse. The money coming in is already not enough. And now we say we should start cushioning the price of fuel.
Meanwhile, Chief Executive of the Chamber of Oil Marketing Companies, Dr. Rivison Opon, said he remains optimistic that the Middle East conflict would ease in the coming months. He, however, noted that even if tensions subside immediately, it could take up to 6 months for local fuel prices to fully reflect any decline in global oil prices.
For me to hear that Russia and Ukraine signing a peace agreement gives me hope that probably after that, we're going to see Iran and Israel come back to peace. If that happens, please don't come asking me if you're going to see the impact the following day. It doesn't happen like that. we've all seen that this has been a periodic, kind of situation.
Sure.
And indeed, if the war ends today, it's going to take us an average of 6 months to recover.
Fully.
So, looking at refineries that have shut down, vessels that have been pounded across the Strait of Hormuz, we need to know that even if this war ends today, we need to have the mindset that it's going to take time for us to have the positive impact.
We'll now take a look at how the cedi is faring against major trading currencies and how some of the key commodities are also faring on the global market.
On the interbank foreign exchange markets, the dollar is selling at 11 cedis 41 pesewas. It recorded no change. The British pound is selling at 15 cedis 21 pesewas. It lost 22 pesewas. The euro is selling at 13 cedis 27 pesewas. It also lost 10 pesewas. However, be guided that these figures could be higher at a forex bureau near you. On the global commodities markets, Brent crude is trading at $109.26 per barrel. Gold is trading at $4,540.80 per ounce, down by $111.90. Cocoa is trading at $4,002 per ton, down by $187.
Well, what you heard was an update from the Forex and commodities market. That'll be all for the business news on Sunrise. For more stories, please check out our website, 3news.com. I am Christabel Success Treve. Sunrise continues. Don't go away.